Welcome back everyone. It's been a while since my last video. I want to talk about a Canadian dividend paying stock that I own called CNR. A lot of you guys have this in your portfolio. We're just going to touch on it quickly today and why I think it's a good opportunity to purchase here going forward. First, I want to touch on the basics. It trades under ticker symbol CNR on the Toronto Stock Exchange, and yes, it is dual listed, so you can buy it on the American Exchange with USD. Now, on a 5-year time period, this stock has done almost nothing. It's down 1.5%. However, it's had some good times in between the 5-year period here. We seem to be in a particularly bad period. We're going to touch on that in a little bit. I just want to take a look here on the 1-year chart. As you can see, it's down almost 17%. It's really been a poor performer. CNR pays a respectable dividend of just under 2.7%, so that's really not too bad. Obviously nowhere near a bank or an oil stock, but for a steady Eddie, this is pretty good, and I think it can be a cornerstone of a dividend portfolio because this company will definitely be around in the next 100 years, paying you year after year. So the ex-dividend is September 8th for any of you out there who are interested. Now I want to touch on the poor performance. Obviously there is a trade situation going on between the US and Canada right now. Everything's kind of up in the air. Tariff this, tariff that. You don't need me to touch on that, but you know there's a lot of if and or maybes, okay? So that's why the stock has performed so poorly this year. Mainly, that's the main reason, and that's why, in my opinion, it is a good opportunity to pick up shares here at this depressed price. As you can see here, these are the service routes highlighted in red, and it goes through Canada, pretty much coast to coast, and it goes down to the United States. So those are our issues. You know, things are liquid right now. We don't have anything concrete on the trade situation. So, you know, there's uncertainty right now. Uncertainty gives you a discount in these type of companies. Also, I'd like to highlight trucking companies are of particularly good value currently, such as TFI. But you know, I think CNR is a lot safer, and that's why I'm highlighting this company today. But just if you guys are interested in other logistics companies, take a look at TFI. Now, up on the screen here, I have a illustration of CNR's revenue streams, and you can see it's pretty diverse, and I think this is important, and anyone buying this company needs to know that if one section of revenue goes down, we can hopefully ideally make up with it in the other sections. That's why this company is like a fair weather. This is going to hold you down in tough times. Look, we have automotive, petroleum chemicals, coal, fertilizers, materials, you know, all these different categories. So if one drops off, especially if one gets tariffed to the extreme, you know, we can load these cars up with different cargo. Okay, this is a good map. This should make you feel better if you own this company or if you're thinking about it. Okay, so you can see there's alternatives if this company runs into a problem moving one type of equipment or another. The diversity of this revenue stream makes me sleep at night owning this company. Okay, this is very important for me, and I just want to highlight that for all you guys. Now, also I want to highlight this map here where the trains run through. As you can see, it's coast to coast in Canada. Now, let's leave out America for a second here. This coast to coast train tracks is very important because we do a lot of trade between provinces. Now, there are some barriers, but this new government that we have in place is talking about lifting some of these barriers, making it easier for provinces to trade with one another. Now, if that happens, and this is an if, okay, this is not a for sure, it's my theory that this will happen because we need to look within. We need to look within our borders to strengthen this country, this economy. So what we're going to do is make it easier. And what's one of the best ways to do that? Rail. Trucking and rail, guys. So, you know, CNR and CP hold the best rails in the country, and they're the ones that are going to benefit if these trade barriers go down. Additionally, I just want to point out that this company does do a respectable amount of share buybacks in addition to paying the dividend. On the screen here, you can see they have a little bar graph of dividends paid out and share repurchases. Look at the share repurchases going up over time. I really like to see that because obviously as a dividend investor, you guys know that you have more of the company. Whenever the company buys its own shares back, your piece of the pie just got that much larger and the dividend just got that much safer. So I like to see this type of thing going forward. You know, the only negatives I really see on this company is that, you know, a logistic company of this size, it can be difficult. You're dealing with a bunch of different unions, all these workforces within this company. It is difficult. I work in a union environment. I understand some of the management versus worker components of this stuff. So I don't know if you guys remember, but there's recently a bit of a strike, short-lived, and it got sorted out. But you're always going to have these labor disruptions, and it really hurts the bottom line. In the long run, it hurts shareholders. Okay, so you're going to have that to deal with. That's a negative. There's been some management issues here or there for this company as well that have been a negative. But overall, it's pretty positive going forward. I think at these valuations, if you purchase in the low 130s, I don't think there's much risk, guys. I mean, I feel very comfortable about it. That's all I'm going to say, that I bought it. And let me know if you guys are liking this company, if you're purchasing it too. And I'll see you in the next video. Thanks so much for watching.